Welcome back to Finance with Manvi. Today we're diving into one of the most exciting and riskiest areas of the stock market, penny stocks. These tiny price stocks get a lot of attention for their potential to turn a few dollars into a huge profit. But they also come with some big risks. Let's break it down in 5 key points every beginner needs to know before trading penny stocks. All right, first, our agenda. What are penny stocks? Why do people even trade them? The big risks, when and where to trade them, and some tips for beginners. What even are penny stocks? So, penny stocks are shares of small companies that usually trade for less than $5 per share. They're called penny stocks not because they cost 1 cent, but because they're cheap compared to normal stocks. Most of these companies are small, not well known, and sometimes struggling financially. Because of that, they don't qualify to be listed on the big exchanges like the New York Stock Exchange or NASDAQ. Instead, they're usually found on something called the OTC markets or over the counter markets. These OTC platforms have way fewer rules and less regulation, which means less protection for you as an investor. Because these companies are so small and unstable, their stock prices can swing wildly up and down, making penny stocks super risky but also super tempting. So, why do people still buy them? The primary reason is just the price. The penny stocks are so cheap that you can buy a huge number of shares with just a small amount of money. For example, if a stock is trading at 0.50 cents, you can buy 200 shares with just $100. That kind of access makes people excited. They think, what if it jumps to $2? I'll 4 times my money. Penny stocks are seen as a way to make big profits quickly, especially if you catch a company that suddenly grows, gets news coverage, or gets bought out. Some traders believe they're finding the next big success story early, like a company that could one day become the next Tesla or Amazon, but in reality, that's extremely rare. What are the big risks involved? But let's talk honestly. Penny stocks are risky, like really risky. These companies don't often have finance or strong finances, actually, a proven business model, or even a working product. Because of this, their stock prices can crash just as fast as they rise, or even worse, become worthless. And since these stocks are usually low volume and lightly regulated, they're often targeted by pump and dump scams. Here's how that works: someone hypes up a penny stock online, tons of people rush in to buy it, the price shoots up, and then the original promoters dump all of their shares, making the price crash and leaving regular investors stuck with losses. So, if you're not careful, penny stock trading can feel more like gambling than investing. So, where and when to trade them? So, if you still want to give penny stocks a try, you'll need the right broker. Most of them trade on OTC markets, so you'll need a platform that allows OTC access. Brokers like TD Ameritrade, Fidelity, or interactive brokers are good options. You should also limit orders instead of market orders. Penny stocks prices can jump around quickly, and a market order might fill at a much worse price than you expect. Another thing is to watch out for is the bid ask spread. That's the gap between stocks someone is willing to buy and the price someone is willing to sell. On penny stocks, these spreads can be huge, which makes it harder to make a profit unless the price moves a lot. Okay, as always, we're going to do a few smart tips. Number one, only use money you can afford to lose, as penny stocks are risky. Number two, you always do your research. Google the company, check if they have financial reports, a website, or a real business activity. You need to be 100% okay with this. Number three, be very cautious about hype. If you see everyone on Reddit or TikTok or YouTube talking about a penny stock, it might already be too late. Or worse, like I talked about before, it might be a trap. I told you that they're called pump and dump scans. So if y'all weren't listening, basically someone on maybe a very popular platform or something like TikTok starts hyping up a singular penny stock. When the penny stock gets really popular by people putting money into it, they're gonna move out of the penny stock, which makes the market crash, making all of this just a big scam. All right. Next is, most importantly, stay small. You don't want to be focusing on the wins or the rich fast. You really want to focus on how to learn and how to grow with it. Okay, thank you so much for today. Penny stocks can be exciting, and yes, people do sometimes make money with them. But the truth is, for every winner, there are a lot of losers. The key is to stay smart, stay cautious, and never invest more than you can afford to lose. If you like this video, give it a thumbs up and subscribe for more beginner-friendly finance topics. And let me know in the comments, would you ever trade penny stocks, or are they just a bit too risky for you? Thank you so much for watching, and I'll see you in the next one.